Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, speaking to you this September 13th, 2016. And I'd like to remind you, I also write a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. And my company, Taylor Hard Money Advisors, is in partnership with Chen Lin, who publishes What is Chen Buying, What is Chen Selling. And you can subscribe to both of those letters by going to miningstocks.com. You can also pick up a lot of commentary on things that I believe affect the markets. Very interesting articles from Zero Hedge and elsewhere. We provide links there so you can follow a lot of the key stories, the drivers behind the markets. Also, you can keep up with the companies that I follow in my newsletter and the news events for those companies as well. Links are there at miningstocks.com. I want to thank our sponsors for making this show economically viable. Our sponsors for today's show: Coral Gold Resources, New Legacy Gold Corp, Brazil Resources, Novo Resources, Columbus Gold, and Aran Resources. Well, I've titled today's show, A Brain-Damaged U.S. President with Finger on the Nuclear Button, ? Our guests today, William Engdahl, Dr. Quinton Henning, and Michael Oliver. As almost every week, we have Michael with us, and we'll be asking him about these crazy markets in just a minute or two. Well, amidst growing evidence of severe health issues facing Hillary Clinton and ongoing revelations of lies and corruption involving the former Secretary of State and the Clinton Foundation, makers and shakers in American politics like Karl Rove and Rupert Murdoch and a host of other neocons appear to be conceding a possible Trump presidency, and as such, now seem to be seeking to guarantee that the strings attached to their new White House puppet are intact. How might either candidate deal with the rising economic powers that are growing in China and Russia? The new Silk Road stretching from China all the way to Eastern Europe, well, that's a topic we'll be discussing with William Engdahl. Or does it really matter, in fact, if it's really true that the president is not the president? In fact, there are the military-industrial complex and the bankers, the powers that be, and the people that create money out of nothing are in a position to basically tell people what to do, including the president. Well, does it really matter if Hillary wins or if the Donald wins? So those and more questions we want to pick William Engdahl's brain on those issues. Now, after our first commercial break, I will be speaking to Dr. Quinton Henning. He's the president and CEO of Novo Resources, which is personally my number one pick. It's the stock that I have the largest percentage of my portfolio in. Dr. Henning has discovered one of the most interesting and I think potentially one of the most significant new gold discoveries in many years, that being in northwestern Australia. At least that's the way I see it, and I think there's reasons to be very optimistic about what Dr. Henning is doing. Well, he has a lot of exciting things to tell us, so I hope that you'll stick around and listen to Dr. Henning, and he'll come to us right after the first commercial break. But before we get there, we do want to talk to Michael Oliver on a day in which there does seem to be some blood rolling in the streets down on Wall Street, and that some of those financial districts seem to be hurting quite a lot today. Stocks and bonds going down. When the stock market goes down, we used to see money transferred into the bond markets, the U.S. Treasury markets. That doesn't seem to be happening today. So we're very pleased to have Michael with us to try to help us figure out what's going on. Thanks for joining me again, Michael.
Oh, great to be here, Jay.
Always good to have you with me. You know, the Momentum and Structural Analysis newsletter, folks, go to olivermsa.com, olivermsa.com to catch up with Michael and to consider subscribing to his letter. Michael, over the weekend, you provided more evidence that the T-bond is nearing the edge of the abyss, I would argue, potentially. At least that's the way I sort of read your letter. I see today that the T-bond market is getting hit hard again, despite the fact that money is also coming out of the equity markets. As I say, we used to see during normal times, we'd see money coming out of the equity markets going into the T-bonds or into the Treasury markets, short-term or wherever. Doesn't seem to be happening today. So what's your read?
My read is that they are rejoining at the hip after many years the other way, or many jiggles the other way. There might be a moment here and there in the next few months where you get such a sharp decline in stocks that bonds do rally that day or for a few days, you know, that type of thing. But in general, I think their major trends are headed down in sympathy. In other words, higher rates will bring lower stock prices. And I think the shock effect is how much sharply higher the long end of the government bond market rates will be from where they are now. And there are a lot of talking heads out there now that hedge fund managers and not just the people from the Austrian School of Economics, but people on the other side of the spectrum also talking about the government debt bubble, and they're worried about it. And so it's a rising consensus, and I'm not a contrarian, so I don't believe in fading the crowd, but I do see potential between now and the end of the quarter that a lot of markets are making the movements toward major moves that will unfold in the fourth quarter. Down in stocks, down in T-bonds, further up in commodities, more decisive up in commodities and gold. But that there's confusion in the final weeks of the third quarter. And there's some technical reasons for this I could explain, but it would bore you. It just looks to me like it's happening in all of these markets, so don't be shocked if the bonds throw a little fitful rally at some point in the next few weeks that will confuse the bond bears, the witch bond bears. Stocks, I think when I came into the month, MSA put out a report and we said 2118. If you see that number, this is not just going to be a mildly down transition month. It could be sharp. We stopped at 2119 the other day. Today, just above 2120 at 90 miles an hour. We stopped at it. So I love my number. If you touch that number, I think you might see unchanged on the year before the month is out. That's down at 2043 or something close to that. However, even that, there could be some confusion between that low and where you are by the early in the next quarter. You could get a rally. I don't think you go back to the highs or anything like that, but you could get a sharp little rally if you go down that low this month. But anyway, what I'm seeing is the arm wrestling match is aligning the markets for a decisive move in the fourth quarter. Down stocks, down bonds, up commodities.
All those major play tectonics that you talked about, grinding slowly, it seems, against each other. But when the when something reaches that sort of that critical point of energy, everything explodes, and you have a massive change. It can happen. I guess that's what you're looking for, that whoosh moment. That it could happen any time. And of course, you've been warning about this now for some time, and I think people need to be aware. Well, just with a couple of minutes left yet, gold seems to be holding up pretty well today in this market in which almost everything is going down. I saw it was down $5 or $6 for the most part, about 0.5%. Any concerns about gold at this stage?
No, I still don't have concerns. I think gold is in a congestive mode. I think it's playing around. I think it's doing... The more important issue for me really isn't the gold, it's the gold miners. And I'm not concerned about downside. I'm concerned about... I think what they're doing is they're setting the stage of confusion this month, because they had a sharp down, if you recall. Then we said when they were down in the 25s that we'd probably see 28.5, 29 before in a rally. We saw that last week. But that rally would fail, we'd come back down, we're coming back down. I think this is really just congestion prior to certain things happening next quarter for the GDX, which is the ETF that I watch, which is the major gold miners, and it's unlevered. So I think the best thing to do in the gold mining sector is cover your eyes and believe. I say that with technical confidence, not with sheer faith. I think they're setting confusion so that the next move can come out of the confusion sharply, and I think it is a sharp resumption of the upside. From I'll give you a specific number. If you see the GDX trading around 27 zone anytime in the fourth quarter, early fourth quarter, buy it right there.
All right. Well, and the GDX, of course, for sure. I can tell you that my particular portfolio is down 5% today, but that's because I have a lot of very high risk, high return exploration stocks in there in the GDX, and those are not down, not by anything like that. But I think, Michael, you were suggesting last week that you're not quite as convinced that the gold shares will necessarily outperform the bullion now. We've seen that happen, of course, during this first few months of this bull market in gold, but you're still of that opinion that we may see relatively more strength in the bullion than in the
I still think you've got more strength in the miners, but it's not the big deal anymore. It was a big deal in the first 9 months because they went up 100+%. Gold went up 25. I think that GDX may still beat gold a little bit marginally, but it's a coin toss now. If you want to buy bullion or equivalent thereof, as opposed to the miners, I think you're not missing a lot at this point.
All right, very good. Well, thank you very much again, Michael. We're out of time. Always never enough with you, but thanks for joining us again.
Thanks, Jay.